Good morning, it's Trisha with Easy E-mini Trade, and today I wanted to go over how you can take breakdowns or breakouts based on yesterday's trading during a really fast market, how you can get in on those breakdowns. And they work best when you have a really nice strong trend in one direction or the other. So let me go ahead and show you how you can do that. So what you're looking at is the NQ from June 1st. And just a heads up, I'm going to be doing a webinar on breakouts, breakdowns, range trades, and also finding support and resistance on Thursday. So if you're interested, just go to my site and choose the webinar tab and all the information is there. Okay, so we're looking at, like I said, the NQ on June 1st, and right off the open, kind of going back and forth here, not really doing anything. And then you can see it starts to move lower here, and this is a 200 period moving average in red here. And you can see it does a little consolidation here. I'm not quite ready at that point to take a short because it's just a little too early for me, and I would like it to be away from that 200 period moving average. So I'm not really interested in this, but if you were, you could look for a close below this support line drawn here and enter in a tick below that. Now, if you didn't take that, you had one here at 934. Now all I'm looking for in a trending market is the period of these little tiny consolidations. Now this is a 1-point range chart, so whatever you're using, something larger, time-based or tick-based or a larger range, whatever you like to use. So you get this little mini consolidation here, you get closed below the trend line drawn here, and all I do is I just draw a trend line once we get the little consolidations, and then I look for a close below that. And I didn't take this one. This is the one that I was looking to take here at 935. Get this little period of consolidation. It's at the 50% fib retracement area, and this is the bar that I'm looking to get in under. Now, yesterday morning, everything was so fast. It's like as soon as it was breaking these areas, in a matter of 5 seconds, you had like 5 or 6 bars. So you have a couple options when things are moving that fast. Obviously, if you're looking to get in under this bar and you're sitting there, trying to place your order, and it just goes that fast, it's like boom, it breaks, and now it's all the way over here already in a matter of seconds, then you have a couple options. One option would be to trade off a larger chart. And then the other option is if you see that continually happen, then just place a standing order a tick or two below your support area. So missed this one because I was looking to get in under this bar here, sat there waiting for it, and as soon as it broke, it just went. It didn't give me any time to place my order. And I use a range bar predictor, so I know ahead of time what the estimated high and low are, so I can go ahead and place my order while this bar is still forming. Most of the time, there's plenty of time to do that. Here, you get this little consolidation under the pivot point. You could also enter in under that. I prefer to see a couple bar hold when it's in the area of like the previous day's high-low close pivot point, 50% fib retracement area. So here we get another one. You can see we're consolidating here again. Draw a support line here under the low. That's the area here that's consolidating. Look to enter in a tick under this bar here. Now we've got the close of the previous day here below us, so you have to determine if there's enough room for you to take that trade or not. And if there is, then you take it. If not, then you wait till you have more room to the next support level in order to take the trade. Here is, like I said, the close from the previous day, which would have been Friday's close. Now this is what I like to look for in those areas. Instead of just taking the breakdown as soon as price breaks those areas, those are areas that can kind of suck us in just to watch it go against us. So what I like to do is I like to look for a break of that area, like here, so it establishes an area just under the close from Friday. And then here you can see it retests that area and holds. So I go ahead and I draw my support line, and I'm looking for a break of that. So based on how price had been moving earlier, every time it broke those support levels, I just placed a sell stop a couple ticks below this area here. And once again, if you were waiting for a close below this bar here to get in, these bars all happened like in a matter of 4 seconds, you got 5 bars to go by. So if you didn't place a standing order, you wouldn't have been able to get filled on that. So that's a way that you can get in those. And those types of breakdowns or breakouts work really well when you have a really strong trend happening. You just take those little mini consolidation periods and then you look to enter in this case, under those areas. So I hope that helps, and I'll go over it in more detail on Thursday during the webinar. And if you have any questions, you can shoot me an email, and I hope you'll have a fabulous day.